RateScope here. A Chinese billionaire just bet $300 million against silver. Beyond Shengming, a low-profile Chinese trader who reportedly made nearly $3 billion from bullish gold trades, has placed the Shanghai Futures Exchange's largest net short bet on silver, now worth about $300 million. His short position totals roughly 450 tons, around 30,000 contracts. Silver's recent 16% drop boosted his paper gains. But here's what's happening simultaneously. While this Chinese billionaire establishes his short position, the Trump administration convened 54 countries to address critical mineral supply chains and pricing mechanisms. Vance and Marco Rubio hosted 54 countries for a Critical Minerals Ministerial meeting. When they use the words critical minerals, understand this is code for physical silver. President Trump is not going to allow China to corner the silver market. The global structural silver supply deficit can only be alleviated through higher prices, increased production, decreased demand by cutting off Chinese access to Western metals. The Trump administration just fired all 3 silver weapons at China simultaneously. Current prices as I'm recording: silver Western spot, $70, Shanghai spot, $81, Shanghai futures, $99, Shanghai premium, $11, gold, $4,808. Before we move on, I've received comments and messages asking why I called out the 87 to 90 zone as resistance on the paper market. We saw 3 rejections there. Price has now pulled back to around 71. If you'd like me to cover the technicals in detail, comment below. We can definitely dive into that occasionally, though not in every video. For long-term investors and physical stackers, I'll say it again, this is pure noise. But if you're trading paper, listen up. I've said it 100 times. If you're over-leveraged, sizing too big, and trading without a plan, these markets will eat you alive. You need a solid strategy and ironclad risk management, especially when trading with leverage in this kind of volatility. Look around. Everything's dumping right now. Stocks, crypto, metals, everything. If you're really here to learn and you're finding value in what we do, hit subscribe and drop a comment with RateScope so I know you're part of this community. What Vance actually said at the ministerial meeting. Vance emphasized that despite the focus on digital and tech economies, real physical commodities remain fundamental. He noted the room represented roughly 2/3 of global GDP and stressed the need for greater independence and self-reliance in critical minerals. He then addressed current market conditions, stating that international critical minerals markets are failing to create sustainable domestic industries, secure supply chains. He pointed to concentrated supply chains, persistently suppressed commodity prices influenced by forces outside individual nations' control. He acknowledged that mining projects frequently stall and fail due to erratic, unpredictable pricing that makes consistent investment nearly impossible. The stated goal is to stabilize pricing to enable domestic supply chain development. The implication is clear. The U.S. government recognizes artificial price suppression in critical minerals markets. It is working to address it through policy. This is official acknowledgement at high levels that current market pricing mechanisms are dysfunctional and require intervention to support strategic domestic production. Physical reality. Australian bullion dealer City Gold halts silver sales due to global silver shortage. Retail sales pause not because of a temporary demand spike, but because of an actual shortage forcing dealers to stop selling. India's MCX hikes margins. Silver margins up 7%, gold margins up 3%. Exchanges don't raise margins out of comfort. They do it out of fear. If gold were the main problem, gold would be hit harder. It isn't. Silver is. High margins equals stress. Stress equals positioning risk. Positioning risk equals too many traders on the wrong side. They're not protecting investors, they're protecting the system. The market is telling you what it fears, and it's not gold. COMEX Silver Deliveries Report. Another 608 delivery notices issued Wednesday. JP Morgan issued 531, stopped 239. Total. COMEX February silver deliveries rise to 3,563 contracts, equals 17.815 million ounces, just 4 days into a non-primary delivery month. COMEX gold deliveries. 2,692 February notices issued Wednesday. Barclays issued 1,304. JP Morgan stopped 740. Citigroup stopped 1,000. Total February gold notices rise to 3,204 contracts, equals 3.2 million ounces. Physical demand is relentless. But here's the war. Silver is trading nearly 80 cents per ounce in backwardation after the historic price slam. Spot silver is currently around 80 cents above front-month March futures. Backwardation means you pay more for silver today than 3 months from now. That only happens when physical is desperately tight and nobody wants to wait. Macro, everything crashing together. Crypto market hit a record $4.3 trillion cap on October 6th. Today, about $2.3 trillion, losing $2 trillion in 4 months. 46% of crypto's entire value wiped out since October. Bitcoin just dropped below its 2021 all-time high. U.S. stocks falling after weak job data. Nasdaq down 1.34%, wiping about $517 billion. S&P down 1.13%, erasing about $695 billion. Russell 2000 down 1.5%, losing $47 billion. Labor data. Initial jobless claims rose to 231,000 versus 212,000 expected. January job cuts highest since 2009. Companies announcing very few new hiring plans. Rising layoffs plus slowing hiring equals leading indicator of economic weakness. Markets are pricing that risk now. US dollar is dumping at the fastest pace since 1980. Now the second worst performing currency across the G10. A year ago it was the strongest. Past 3 months, most G10 currencies have gained strongly against the dollar. AUD up 8%, SEK up over 10%, NZD up more than 5%. Why? Rising political uncertainty in the U.S., aggressive, unpredictable trade policy, and repeated tariffs. Markets pricing risk of broader trade war, triggering a sell America trade. Concerns about Fed independence and political pressure to ease policy. Growing worries about fiscal deficits and long-term debt sustainability. Ongoing trade tensions reducing foreign demand for dollars as countries shift into gold and silver. Treasury Secretary Bessant acknowledged hearing reports about China developing digital assets backed by physical commodities rather than the renminbi, specifically for international payments and reserves. Meanwhile, China's actions speak clearly. Gold reserves at all-time highs, 74.1 million ounces. U.S. Treasury holdings down to $682.6 billion, the lowest in 18 years. China has cut its Treasury holdings by over $600 billion since 2013, while doubling gold reserves. The shift from dollar-denominated assets into physical commodities is measurable and ongoing. Every asset on Earth crashing at the same time is not a free market sign. It signals extreme intervention and stress. Precious metals markets are in the middle of a fight between banks still shorting gold and especially silver, and overwhelming global physical demand. The coordinated smash of derivatives in silver and other critical minerals was timed right before this 54-country meeting. We're witnessing a coordinated worldwide reset in critical minerals, from discovery to market into production. This meeting, hosted by Vance and Marco Rubio, wasn't just table setting for trade deals, it was planned and coordinated. No doubt, the coordinated smash of derivatives was timed right before the critical meeting. While a Chinese billionaire shorts $300 million in paper silver, the Trump administration is establishing a price floor system and restructuring the entire global critical minerals market. Positioning, sentiment, and structure. When sentiment becomes excessively bullish, buyer exhaustion can trigger pullbacks even in tight markets. We've seen this repeatedly since the 2022 cycle low. Violent corrections followed by resumption of the uptrend. Current situation. Fundamental tightness is real. Physical shortages. Dealer halts. Backwardation policy shifts supporting production. But short-term positioning became crowded. Chinese billionaires $300 million short. Exchange margin hikes. Forced liquidations. Technical indicators across risk assets show deeply oversold conditions, similar to previous major bottoms, though oversold markets can stay oversold during deleveraging. The contrast between collapsing paper prices and intensifying physical scarcity creates the classic divergence that defines these markets. Stock market fear at highest in 2 months. Volatility everywhere. China and the U.S. now competing directly over critical minerals markets, both sides implementing strategic policy. The 54-country meeting, Vance's statements on ending manipulation and installing price floors, and the focus on making critical minerals markets predictable and independent from concentrated control. All of this is the countermove. While Bian Shengming shorts $300 million in paper, the Trump administration is restructuring the physical market to cut off Chinese access and ensure domestic supply. 3 takeaways. 1. Chinese billionaires' $300 million short versus U.S. policy response. Bian Shengming shorts $300 million silver, 450 tons, 30,000 contracts. Made $3 billion on gold, now betting big against silver. Trump administration responds. J.D. Vance hosts 54 countries, about 2/3 of global GDP. States manipulation must end. Prices must be predictable. Supply chains independent. Price floor system coming. China will not be allowed to corner silver. Physical policy tools. Higher prices. Increased production. Cutting Chinese access. All 3 are now in motion. 2. Physical shortage accelerating despite paper crash. Australian dealer halts sales due to global silver shortage. India raises margins. Plus 7% silver, plus 3% gold. 17.8 million ounces COMEX deliveries in 4 days of a non-primary month. Silver backwardation. 80 cents after the slam, spot tighter than futures. Dollar dumping fastest since 1980. Crypto down 46%, $2 trillion wiped. Job cuts highest since 2009. Everything crashing, but physical silver is disappearing. Besant confirms rumors of China gold-backed tokens. China dumping treasuries, doubling gold reserves. 3. Coordinated smash plus ministerial equals reset in critical minerals. Smash in derivatives time before the 54-country ministerial. Worldwide critical minerals reset underway. U.S. policy. Manipulation must end. Price floors and predictable markets coming. Sentiment got too bullish, leverage too high. Chinese billionaire sees a short-term opportunity. Markets oversold. Analysts like Gary Savage say this is temporary, similar to every correction since 2022. Next rally could be much bigger. Mining stock specialists like Brian London point out miners remain extremely undervalued, with fortunes to be made, but short-term pain is real as positions unwind. Unresolved tension. Does Bian Shengming's $300 million short get squeezed as the Trump price floor system is implemented and physical shortage intensifies? Or does deleveraging continue, pushing prices lower before structural forces take over? Exchanges are raising margins, forced selling still possible. J.D. Vance is openly saying manipulation must end and price floors are coming. 54 countries are coordinating. Dealers are halting sales. Silver is in backwardation. Who wins? The Chinese billionaire's $300 million paper short or the U.S.-led physical restructuring plus global shortage? The timeline will determine whether we test lower first or if this zone marks the bottom before policy changes everything. Do your due diligence. Understand the risks. Sentiment reached extremes, leverage is unwinding, and a Chinese billionaire has established a $300 million short position at the same time the Trump administration is implementing policy changes through the Critical Minerals Initiative. Physical shortage indicators remain present. Backwardation confirms tightness in spot markets. Know which time frame you're operating in. Invest with logic, not hype. Use your own brain. Don't follow anyone blindly. RateScope out.